Hello, everyone, and welcome to my presentation. My name is Ambika, and I will be presenting my analysis of UK clothing retail industry. Here you can see the table of content. In my presentation, I have examined financial performance, operating efficiency, and strategic implications between 2015 to 2024 using data from FAME, IBS World, Statista, and the official websites of the companies. Before I begin with the presentation, let's have sector overview. The UK clothing retail sector is one of the most competitive globally. It includes supermarkets, fashion retailers, department stores, and online platforms. Recent trends show that a digital world and changing consumer habits have reshaped this market. Customers prefer online shopping and value sustainability and ethical sourcing. Major firms like M&S, Next, Primark, New Look, and ASOS combine affordability, fashion, and technology to stay competitive. Since the pandemic, the focus has been on omni-channel strategies. That means companies are trying to balance online and in-store operations. In the next slide, we are going to talk about business metrics. This research uses secondary data from FAME, IBS World, Statista, and the websites of the companies, as I already mentioned. And here we can see the two groups of variables, which is independent variable and dependent variable. Independent variables are number of stores, total liabilities, number of employees, which are directly influenced by the management. Independent variables are turnover, profit or loss before tax, gross margin, and current ratio. This helps access how management decisions influence financial performance and operational efficiency across firms. Now I will show you how my data collection looks. This is just a small screenshot of it. I have put the link on the side so you can access it later on. And now let's move on to the next slide, which is about the business dashboard visualization. Here you can see the prediction until 2030. Next becomes the clear market leader. Having a market share of 53% by 2030. This is something which is forecasted. ASOS follows with 47%. And New Look and Primark falls behind, demonstrating the effectiveness of digital first. In the next slide, we are going to talk about the trend over time. Here we can see the profit or loss before tax. This chart contains the data from 2015 to 2024. Next maintains a steady profitability and leads overall. M&S recovers after 2022 due to strategic restructuring. ASOS and New Look show declining profits, indicating operational challenges. Primark remains stable. Overall, this trend suggests that cost control and diversification drive profitability and resilience. In the next chart, we have compared the turnover of the companies over 10 years. Here we can see that M&S leads in total turnover and shows consistent growth. Next maintains stable revenue. ASOS peaks in 2022 but later declines. New Look drops in 2021 and partially recovers. These patterns indicate that financial stability and brand adaptability are key to sustaining revenue growth. In this chart, you can see the intercompany performance comparing return on equity. Here we can see that Next records the highest return of equity above 1,300, showing efficient capital use. Primark ranks second with solid financial health. M&S, ASOS, and New Look show weaker capital efficiency. Overall, high return on equity reflects effective equity utilization, while low return on equity suggests inefficiency and structural weakness. The next chart is a pie chart, which is a comparison over 10 years of current ratio. Here we can see Next has the strongest liquidity around 19. ASOS and New Look also maintain healthy ratios near 12. Primark and MNS show tighter working capital below 8. The results show that balanced liquidity supports financial flexibility and reduces short term risks. The next chart is about the number of employees over 10 years of the company is mentioned. Here we can see MNS have the most um, number of employees, which is 750,000. Next and Primark stores have significantly around same, let's say between 360,000 to 320,000. ASOS have the lowest count of employees, which is fewer than 50,000. And this is because they do not have physical stores. They mostly operate online. In the next slide, you will see the business effective business dashboard, where you will see that the major players of this sector are Next Group, Primark, and in the next picture, the revenue which is forecasted to 2030 of this sector, which says that the change will happen, and the growth is not that high. In my opinion, it could be because of the customer behavior. They are more into sustainability, and that's why they would not buy so much clothes which they do not need. In the next slide, we are going to talk about the predictive analysis correlation. The correlation analysis identifies strong positive links between store count, liabilities, and employees with profitability and liquidity. It suggests that expansions and effective liability management contribute to improved financial outcome. This analysis supports a data-driven approach for managerial planning and forecasting. The next slide is about regression. The regression output confirms these relationships statistically. Store number, employee counts, and total liabilities significantly affect profitability. Measures like turnover and current ratio. This shows how quantitative forecasting can help managers to allocate resources and plan operations more effectively. um, After all the analysis and charts which we have seen here, we will talk about managerial decisions making implications, which says that resources allocation should focus on profitable business areas. Firm must strengthen digital and omni-channel capabilities due to the changing customer behaviors, implement risk management and cost control systems to handle volatility, integrate a sustainability and EGS principles to build a long-term reliance. Overall decision making should be based on evidence, innovation, and strategic forecasting. In the next slide, we are going to talk about key analytical focus, where it says that clear relationship between operational variables and financial performance, cost efficiency, scale, liability management drive profitability. combining financial ratios with performance using predictive analytics supports proactive data-led strategic planning. These findings highlights how analytics can directly enhance managerial decision quality. The last slide is about the conclusion and recommendation. To sum up, we can say that the UK clothing industry remains competitive and digitally dynamic. Performance varies accordingly to financial management, innovation, and adaptability. Recommendations would be to invest in e-commerce and data analytics to improve competitiveness, strength, cost efficiency, and supply chain resilience, maintain liquidity balance and control leverage, integrate sustainability and ethical resourcing to build trust. This is the topic which is going to be the future. Use predictive tools to anticipate market shifts. Company adopting these strategies will achieve long-term growth and resilience. In the next slide, I will show you the references. And I would like to thank you, and I hope you like this presentation. Thank you very much.